Happy weekend, everybody. Tim Knight here, and it is time for a weekend review. Now, I realize that we're at lifetime highs again, and I realize we have been in a largely uninterrupted bull market since March of 2009. That COVID thing was a, you know, 2 or 3 week interruption. So yeah, it's all part of the same bull market through different mechanisms. In spite of that, um, it would be a waste of time, I think, to simply show you Amazon and Apple and say, go buy these things, unless I provided you a time machine. And I've got to tell you that my completely short portfolio has been really holding its own in the onslaught of these lifetime daily highs. So I continue to contend that well-chosen stocks in this environment hopefully will stand their ground when assaulted and will blossom wonderfully, like on days like Monday, when the market does get weak. So I'm going to focus on those again. And it happens that I have 64 symbols in my bear pen, and I've busted them into 4 equal videos of 16 symbols each. And going back to the old routine about everybody will see videos 1 and 3, and only paying members will see videos 3 and 4. So having said that, let's start with the first group, and I'll just one quick bonus chart just to kind of get our bearings about the market in general. Here is just the spider, and none of this is surprising to anybody, but here we have the Federal Reserve driven post-COVID recovery. Here we have our break of that wedge, this wedge going back to the March 2020 bottom. So here we have the break, which we've stayed beneath ever since, and we've got our more muted ascent right here, which has been going, pretty much for the past 3 months. And we've been meandering between this supporting low trend line and this resisting high trend line, which time and again we've approached and it's been repelled. The most recent time was back just on the 14th of July. We had our all too brief 3-day tumble, and in short order we're back to new lifetime highs just beneath that resisting line. So that's the context of all this. So here's the first 16 short candidates. I'll try to mention the ones that I have positions in as I'm going, not that it really matters to these charts. Alliance Data Systems, ADS, right triangle pattern. And zooming in, you can see that we have got a smaller pattern within a pattern, like so, cute little thing, and it's broken down beneath that one. AGCO Corp, we've got 3 major tops here. Here's the most recent one, and we have managed to complete this area above the red zone, but what needs to happen is a completion beneath the 117.86 level here. AAR Corporation, here's our wedge, long since broken. And this is a slow mover, but here's our latest lower high. All right, this is my first position. I've got 15 right now, by the way. This is Ally Financial, ALLY. And here was the sharply ascending trend line. And then here is our support and resistance. And you'll note we've been beefing up chart alerts somewhat. The name is shown now when you mouse over it. So these are the little names I've given to my, for obvious reason, I've called this bad if it does that, and then go down here. So if I'm alerted, I know straight away if this is good or bad news for me. But these are all bounded by these horizontal chart alerts. What's next? Apache, APA Corporation. Here's our gargantuan right triangle pattern there, and we got repelled sharply back on June 7 away from that line. This is another position of mine, Bank of America, a newer one, and you can see that we actually managed to poke our head above this wedge, but now we're back below it, and we are approaching what would be the completion of a very good pattern here at 36.51. Beacon Roofing. This one I wanted to buy puts on, but the options stink. The bid ask is just gigantic, so I didn't bother. But we're wobbling right here. Kind of hard to pinpoint exactly what a break on this would be. Let's be conservative. Let's put it round about there, like so. And that's beacon. Here's my third position, Caterpillar, CAT, long channel, and zooming in right here, broken trend line. And you see this so often. This is, I think, all three of them so far have been like this. You've got a completion of all this overhead supply, but the real deal doesn't really start until this lower boundary is complete. All right, the next symbol is CIT group. And you've got this massive top here in the past. And then let's just draw another one around here, like so. And then most recently, this dainty little fellow. And you can see just how sky high we are up here. Cummins, CMI, long lifetime wedge. And here, same deal, folks. And these are mostly for my, these boundaries are for those slope alerts I mentioned earlier. But, you know, the real pattern is the lower one and then the trend line above. Center point energy, CNP, long channel here, and we're around about the midpoint of that channel, and I do not think we're going to get past all this overhead supply. Cabot Oil and Gas, another right triangle pattern, very slow mover, just glacially slow. But one day, if we break below 12.70, that'll complete that pattern. I'm using the extra space feature here. Let's get rid of that and give us more meat. Copa Holdings, CPA. We've got a failure of this trend line, and we've completed this topping pattern right there. Darling Ingredients. We are way above long-term support, and same deal. We've got a break below this one to complete the pattern, and we're range-bound presently. Deere, symbol DE. Very similar to Caterpillar, long ascending channel, and then most recently a wobble and range bound, having bounced mightily from this low on the 17th of June and just conking our head against that resistance. And the final symbol for this chunk, Denny's, broke its long-term wedge long ago, and when it did recover, it stayed beneath this overhead supply, and now we've got a new range here which has also been broken, and we've broken this trend line. So this is a quite clean setup. I think this price gap here is a very firm level of resistance. Okay, that's it for this video.